QuickBooks Pro Desktop 2021 Tax Line Mapping Schedule K Adjustment for Dividend and Interest Income. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our S-Corp test file. We currently have the open windows open. You can open the open windows by going to the View dropdown, selecting the open windows list. In prior presentations, we mapped out and exported the information from QuickBooks to the Lacerte tax software and to an Excel. Now we're reconciling the information in the Lacerte tax software, checking that how it got mapped over and how to reconcile it within the Excel program. So we have Excel here, and we're currently at the net income of the 75,510. If we go into the tax software to page 1 of the 1120S that has been exported, let's go to page 1. This isn't page 1. This is page 1. We're at the 65,510 at this point in time. And so we have this difference that we need to reconcile. And part of that difference is going to be due to the items on Schedule K. Now, one way we can look at that is we could say, okay, there's two things that are going to basically be kind of confusing reconciliations within the tax software. And one's going to be these Schedule K type reconciliations, which means they're going to basically go on the shareholders' K1s that are going to flow through to their individual tax returns, rather than being here on the line 1 to be calculated in the income basically on line 1 here. They'll be broken out kind of separately. So that's going to be one kind of reconciling item that we're going to have to account for. And the other being the M1 adjustments, which include items that are not taxable. They're not included for the calculation of net income for taxes, but are for the books. So we have these two kind of reconciling type of things that we have within the software. So if I then go into the software and try to figure that out so I can write it down in the Excel worksheet and see what the adjustments are, that's basically what I'm looking to do, just so I can kind of record it on my side so I know what's going on here. So I'm going to go to page 2 here, and let's go to page 3. I'm looking for the Schedule K. So here's the shareholders' pro rata share of income. These are the two line items we're looking at. We had interest income and dividend income that we're pulling over to this item on the Schedule K, which is going to show up on a separate line on the K1 when they're going to be exported out. So then these are going to be basically reconciling items when we think about the book income compared to the tax income with these reconciling items within it. So I've added some owner information so we can see that on the Schedule K1. These are going to be the things that flow through, or the form that is used to flow through the income to the individual tax returns. We can see down here, we're saying we have two individuals with equal ownership. So we got the 3,000, the 7,000, and then the 3,000, the 7,000 in owner 2 would add up to the 6,000 and the 14, which is on then page 3 here, the 6,000 and the 14. So those are going to be, we need kind of a reconciling item on those two. I'm going to go back to our form, and those are listed in our other income line items down below. So I'm going to do a reconciliation of those items. I'm going to take them out of the other income so that I can basically reconcile it down here. So let's do that first, and then we'll talk about where to put them. So I'm going to go down. I'm going to say this is a tax entry. And so I'm on tax. Let's say this was tax 3. This is tax 4. And so I'm just going to list them as I need to adjust them. So these are I'm going to put the equals the dividend income, and this equals the interest income. So I just got those lined up. I'm going to need a debit to make them go down. I'm going to take them down to 0. So I'm going to pick up this item. I'll pick it up from here because I'm going to make the adjustment here. So I'll say we want that. And then the other side, or the other one we want, is the interest income. I'm going to pick that one up here. And also note that I don't have any more adjusting entries, so I'm going to just go ahead and hide these two columns so it'll be easier for us to see this thing side by side. So I'm going to put my cursor on column G over to column H, right click and hide them. And so there we have that. And then I need to flip the sign here. I want this to be a debit or a positive number. And then I'm going to put these two, and so if I post this just as I go, it's going to make these 0. That's what I want. I want to say this equals the 14, which makes that 0, and this equals then the 6, which makes that 0. But now we're of course out of balance. These are now 0, which is what I want, because that's going to make this account tie in more closely to, or get us to where we need to be with regards to tying into what's on the tax line item. What am I going to do with these other two? Well, you could think of it as, well, these are kind of like, maybe we're thinking of them, it's not really business, but more personal income, and maybe it should be thought of as like a draw or something like that. But no, I'm going to put it down here on the bottom line here. I'm going to add some lines and record it here. So let's take a look at what this will look like. I'm going to add 2 lines. I'm just going to select from here to here. I'm going to say right click and insert. I'm going to shift these cells down, and then I'm going to call these basically Schedule K adjustments. So I'm going to say Schedule K, just so I know where this reconciliation is. And then I'm going to say this is for dividends, dividend income. And then I'll say Schedule K, and this is for interest income. I'll make these 2 yellow so I can indicate that these are going to be items that are there just for tax purposes, not on the books. And then I'm going to put a 0 here, a 0 here. The formula has not calculated down, so I'm going to autofill that on down, putting my cursor on autofill handle, dragging that down. Then if I take a look at my totals, if I sum this up, notice this doesn't go all the way down to the bottom. I want it to, so I'm going to drag it down to pick up those 2 accounts. I'm going to then copy it across so that it'll pick up the accounts this way as well. So there we have that. The net income should also pick up those accounts, although they're 0. But the bottom line is on this side, I'm just going to pick the whole thing up. And then on this side, the goal is that I do not want them included, and that's the point. So for taxes, they will not be included. For books, they will, and that'll give us that reconciling item. So I'm going to then say, okay, here's the Schedule K for the other side of the transaction, which I'll record up here. And this is going to be the dividend income. We're just going to record it down. Now, obviously, these are right next to each other, so you could have said, well, why don't I just adjust the formula here not to include those? You could do that, but I'd like to break it out, separately down here so that we can say, hey, these accounts are not, these are the line items in yellow that are part of the reconciliation process. So then I'm going to say that this is going to be negative of the 14, negative of the 6. Let's post those out then. And I'm going to say this is going to be equal to the dividend income on the credit side. And this is going to be equal to the 6,000. So there we have it. That puts us back in balance here. And now we're closer to our line item on the tax return. So if I go to the tax return, and so we've recorded these 2 items. If I go to page 1, then we're now at the 65,510 here. So we're narrowing down on what those differences are, and we'll continue to do so next time. And obviously that reconciling item then is shown here on the tax return as well in these two line items. So I want to basically be able to put that in a way that I can see it as clearly for myself as possible. And then if I go to, and that's why we're doing the Excel sheet, we still have another adjustment here for the 2,000 on the M1s. So remember, the M1s is another kind of place where adjustments are going to be common that will be difference between book and taxes. They're not going to be included possibly on the Schedule K in any kind of place, the form that's going to flow through to the individual tax return, but something that's just simply not deductible, which includes like the meals and entertainment. Also, if I go back to the line item here on Schedule 2, page 2, no, it's page 3. Page 3, we also have this 8,000 that's in the charitable contributions that we need to be posting as well. Now, these 2 came over here automatically when we imported them, because if I went back to the QuickBooks software, lists and chart of accounts, we set those 2 items up as other income down here. That's not what's driving it, but if I right click on that and say edit the account, we mapped them out to the Schedule K1 item instead of just putting them to income. We didn't just put them up here into the income line item, we mapped them out there. So it actually did it for us. And that's pretty nice. It mapped it out for us, but we still need to kind of reconcile and see what happened so that we can understand what's happening with it. So I'd still recommend doing it in Excel. If you didn't do that, if you just put this into basically income, like other income, then you'd have to manually do the adjusting entry. You'd have to do an adjusting entry like we did before, basically adjusting the tax line items to put it into the K1. You'd have to actually do it in the tax return. Same with the interest income. So we actually mapped this out and it did it for us, which is pretty nice. So we're going to say that this one got mapped out to the Schedule K1 instead of mapping it to basically other income on the tax return. So it made that Schedule K adjustment for us as it mapped over into the list search software. So in other words, if we went to the trial balance here, we'd see it mapped out to the Schedule K1 instead of like other income. So that's pretty nice.